What is up, everyone? So, we are back again, this time for part two. We're going to review the market in detail for this past week. Hopefully, this one can be a little bit more in detail. I have more time. Don't have anything going on today. It's Sunday evening. So, hopefully, we can just have a really chill backtesting session, review the entire week, literally reviewing everything that we could possibly know and see, and let the market be our teacher. So, with that, let's jump right into the charts. And guys, I want to be able to play music in my stream so bad, but I feel like that actually would cause issues with YouTube and copyright. So I don't know. I don't know how YouTube stuff works, but anyway, let's jump into it. And I might turn this up a little bit. But yeah, well, it's actually, I don't know, it's kind of bright. Anyway, let's talk about what we have going on. So actually, let's get these on separate tabs. So I'm going to have one screen where I can look for SMTs, another screen where it's a big screen for NQ. And actually, yeah, let's turn this down a little bit. So let's just start jumping into the charts, see what we can find. So as always, guys, you guys know, if you guys don't know how my notation works, I highly recommend you guys do this as well. I have a folder for trades, and then a folder for each asset, and within that, a folder for each month. Right now we're in August. Within that, a folder for each day, and then on any given day, I put the timestamp, the type of the trade, and the time frame. And guys, it's very streamlined, very nice way to do this. So if we find a specific trade, we'll put it on Monday through Wednesday, or Monday through Friday. If it's just a general observation, I'll put it in Saturday. But yeah, let's just jump right into it. So, I think we talked about this retracement a lot. Maybe let's look into the charts on Wednesday, see what we could find, maybe to go catch this reversal, because it looks like, let's see. Yeah, no, it looks like, in all honesty, this move higher, oh, we did catch that, didn't we? We caught that move higher on Wednesday. Yeah. This was a 10 a.m. power of 3. Wait, let me actually look down. Yeah, it was a 5-minute chain still. We caught that move. We don't need to look at that in detail. I guess let's look at Thursday then. Did we already look at Thursday? Oh, yeah, this is what I want to look at. Yeah. I think we looked at Monday already. We looked at Tuesday. Wednesday, we caught that beautiful trade. So let's look at Thursday. I think that's a reasonable place to start for today. So Thursday, we had, let's look at everything in general for Thursday. So on Thursday, I don't have a lot for Thursday. So this is going to be a good day to review, right? On Thursday, actually, going into the end of the day, we had some kind of earnings come out, which ended up taking out this giant liquidity pool here. So, because of that, you could consider maybe us having swept these lows. So how could we have known to be bullish on Thursday? Let's just look around real quick. So it's interesting because we have this buy model. We come up to previous day's high and these equal highs. Then we go lower. Or no, we eventually take out the actual high, drop back down. So guys, I'm just looking around real quick. Alright. So let's actually switch screens here. One hour. Yeah, this is, we ended up having SMT with this low here. Right here. So I don't know if that was with previous day's low at all. But this was SMT. Maybe let's pull up our previous day's highs and lows actually real quick, because now I'm kind of curious. So previous day's low was right here. I don't think there was SMT with previous day's low. But there's SMT with this low. And we end up pushing into this rejection block. So you could definitely call this a Phoenix model. Ooh, you know what? Remember how we were talking about how this ended up being a 5-minute change to delivery right here, right? I bet you if we measure this out, look at that. Oh, we almost go to OTE. Once again, right now we're just kind of looking around. I'm not really going in with any idea. I'm just kind of looking at what happened. So we got SMT with this low. We end up sweeping this low. And then we get Asia session that starts. Just a giant consolidation up here. Let's measure this out. Yeah, so you can see that this was a giant liquidity pool up here. Hey, what up, Hyper? I'm ready for this next week. I'm going to hopefully, my plan, one of the things I'm going to switch up is I'm going to really do my best to, no matter what, get enough sleep. And I think that's going to really help me. And then there's a couple other things I'm going to implement. And with that, I really do think that I should be not missing any trading days and hopefully doing everything I'm supposed to do. But it is kind of hard because I kind of push myself really hard to do everything and I get burnt out. But I have some adjustments I'm gonna make going into this week. So honestly, wait. I'm very interested in this here. So maybe you could consider this a CRT. Maybe? Just a giant candle range here. I mean, it does play out, right? We sweep out this this low. I wonder if we went to the midpoint of this range. Yeah, Monday's Labor Day. I don't think anyone's trading, and yeah, I won't be trading either. I'll be just doing some work for my dad and stuff. But man, weekends are so boring. I just want it to be Monday again, but I don't know. For some reason, it's like I feel like even though as much as I get burnt out in the week, I actually really enjoy the fact that I feel like I'm making progress in my life versus like the weekend. I feel like I'm just, I'm just staying stagnant. And so I don't know. That's kind of why I like the weeks, because I actually feel like maybe I'm moving forward, but you never know. I don't know. Anyway, yeah, we had this liquidity pool. We had this data high. This was amazing for bias going into Thursday. And Dodgy tweeted this out, actually, that this data high was going to be amazing for bias. And it ended up being amazing for bias. So that's a note we should make. Once again, we're just kind of noting anything that we see. Let me know what you guys see. But yeah, this data high was a really nice draw on liquidity. So was this range here. We end up sweeping this low. So you could definitely say this was accumulation, manipulation, and then maybe distribution, right? So Yeah, we'll take some. We're just gonna very briefly mark this out. But you see how the data high was really nice for bias. So let's go ahead and mark note of that. The data high was nice for bias. And Dodge, you did tweet that out, right? Once again, guys, I'm still just taking notes of everything. I'm not exactly sure right now what to think, but we're just taking notes. It's crazy how earnings did all that. Earnings is actually a pretty significant data event. I'm not gonna lie. We should definitely be looking at that more. So let's put this in Thursday. Data high was nice for bias. Maybe you consider the CRT. I don't know. I probably wouldn't, just because it's not obvious enough. What days work for you most in the week for trading? Like, what days are my most successful trading days? Honestly, it's totally, different every time. I don't think it's... For me, days of the week don't really make a difference. For me, it's just whether I have a good day or a bad day. That's just how I feel. And for me, I'm not one of those guys who needs it to be a specific day. I kind of just have good days and bad days. Like, sometimes I trade no news Mondays really well, and it's just because I understand how to trade them. Yeah, it's for me, I can trade no news Mondays because I understand, if you're expecting consolidation, the lower time frame is going to be running liquidity. And so actually, I've had no news Mondays where I've done really well. Most people don't have that. But then I've also had some times where I just had a really good day that should have been really easy, and I just screw it up because my mental state is not there. And so it's it's more of just I need to be more consistent than anything. So, okay, let's see. Just get more information about Thursday. What really happened on Thursday? We had Asia low. We never come back for Asia low, interestingly. Wednesday, yeah, for me, if I had to pick a day, I'd probably say Wednesday, but I'm not super sure. What might have been a reason this actually was such a good trade, actually, now that I'm thinking about this was S&T. Ooh, I just realized. Okay, so the reason that I was kind of confused was because I thought, shouldn't this be sequential S&T? And it's not, but it's partial sequential S&T, meaning we don't have S&T with the actual previous day's low. We don't have S&T with the actual previous day's low. That's right here. But we do have S&T with a low of the previous day. There's a difference, right? Not the actual previous day's low, but a low within the previous day. So that's called partial SMT, partial SSMT. So I need to make a new. And so the way I'm indicating these partial SMTs is I'm doing it with percent signs. Partial previous day's low SMT. Bang. My best is rarely I see lose. What? But that's awesome. Yeah, for me it's Wednesdays as well. Percent. Previous day's low. Wait, is that how I did the notation? Yeah. Percent. Previous day's low. SMT percent. Okay. And then, yeah. What I find interesting is this rejection block. This rejection block is really, really nice. And it's a 5-minute rejection block, and it holds price very well. And why is this a strong rejection block? I mean, on Wednesday I rarely lose. That's awesome, Hyper. That's so cool. Why is this a really nice rejection block, guys? Why is this a really nice rejection block on the 5-minute? Because it comes with a liquidity sweep and an S&T. It comes with a liquidity sweep and an SMT, not just any SMT, but a sequential SMT, not a full sequential SMT, but partial sequential SMT, right? So this rejection block is cracked, right? This rejection block is cracked. So 5-minute rejection block, and now we have the data highs are drawn liquidity. So then we can jump down to lower time frame. Once again, we have previous day's low, partial previous day's low SMT, and then we have that really nice liquidity sweep. My most losses are on Monday and Friday. Yeah, for some reason, like, I don't know. Sometimes I'll have good Mondays and Fridays. Sometimes I won't. It just kind of depends. So this is interesting, right? We barely tap the top of the rejection block. We don't even go to consequent encroachment. Let's go down to 30-second because that's the aligned time frame with the 5-minute. And yeah, you can see that, previous day's low sweep here. Previous day's low partial SMT, partial SSMT. So accumulation, drawn liquidity is the data high. Five-minute rejection block. Then we have a giant accumulation range. So low time frame AMD here, right? Accumulation. And then, yeah, here's that 5-minute rejection block. We sweep these lows here. Bang. So why would we want this rejection block? Why would we want to use this? Because it comes with a sweep of previous day's low and an SMT with a previous day's low. Not the actual low of the previous day, but a low of the previous day. That's what the percent signs mean. It's called a partial sequential SMT. Now, I haven't made a video on that yet, but I need to. And so 5-minute rejection block. And yeah, here's manipulation pretty clearly. We want to wait for an obvious change state delivery. For you, that's here, right? Honestly, I'd probably wait for this one, because this one is very, very obvious. Now, you could take this like this, right? You could take this as a close. So we'll mark out both versions of it. But accumulation, manipulation. Into that high probability rejection block. Here, let's actually make a note of this. Why is this a high probability rejection block? Because it comes with the previous day's low sweep and SMT. Okay, let's go ahead and screenshot this, put it in there. Put it in Thursday. Actually, technically this was on Wednesday. Okay, I guess we'll actually just put it, I don't know, we'll put it in Wednesday because that's when it happened. Five-minute rejection block, high probability because it comes with a previous day's low sweep and SMT. Okay, so now we can drop down the lower time frame, look for 30-second change state delivery. Note how we do not get 30-second change state delivery until we tap the rejection block, and then bang, we get 30-second change state right here. Or you can mark it out as this one or this one. Really, any of them work. Now, we'll mark out all the different ways you could take this, right? Because I'm being realistic. I probably would not take this one. I'd probably wait for us to come up and then backtest this change of state. But we're going to mark out all of them. So 30-second change of state delivery here. Second change of state. It might be better as a 15-minute rejection block. Maybe a 1 hour rejection block. No, I'm just experimenting because I don't know, right? Oh yeah, 1 hour rejection block's way better. You see how we perfectly tapped the CE of that? Interesting. All right, very interesting. So actually, this is better as a 1 hour rejection block. So we'll come back to that in just a second, and we'll mark that out and show that later. But for now, let's just take a look at the 5-minute rejection block here. Yeah, we'll come back to that 1 hour one. 5-minute rejection block here. "30-second change state." Once again, this is more of like a rough draft, not as precise type of model, and that's fine. The 1 hour one is very precise, and we'll look at all of them. I just want to go through them one at a time, right? So enter on that close, and then measure out the manipulation. We hit that 4th standard deviation, and then I'm guessing we hit the 8th standard deviation. Yep, there we go. And which aligns with our liquidity pool, right? That's a key right there. That's key. We align that liquidity pool aligns with that 8th standard deviation. You see that? Bang. So that's another confluence we could have. Once again, though, the more obvious model was on the 1 hour, so we're going to look at that in just a second. So 8 to 8.25. So what time was this at? This was a flow state close with a 5-minute rejection block. Let's put a little note in here as well. But I like the 1 hour one better. I want to at least mark this one out because this was the first one I noticed, right? So 5-minute, 30-second, 20:39 on Wednesday. So saving this. $20.35 flow state close, 5-minute, 30-second. Now, is this the most obvious way to enter the trade? In my opinion, no. We could get a way more precise, obvious version of this trade. So we're going to look at that in just a second on the 1 hour. So why the 1 hour? Because the 1 hour rejection block ended up perfectly reacting off that midpoint. I'll show you what I mean. So backing it up. Okay. Bang, 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 bang. Let's actually get rid of that for a second. Okay. So what I'm talking about is, and let's get rid of the note here. Actually, we're going to keep the note because it's going to be relevant still. This rejection block is also a nice key level. It's a 1 hour rejection block. But it's nice because it's really obvious and it sweeps previous day's low with SMT. And you'll note once we hit the midpoint, this becomes very nice. This becomes a very nice key level to use. Once we see the midpoint of the rejection block perfectly tapped, that is a good sign that smart money is on our side. So let's actually get rid of the liquidity pool for now. And let's get rid of the note about the data high for now. So 1 hour rejection block with previous day's low sweep. We perfectly tap consequent encroachment here. So CE tap. Kind of cool, right? Alright, so 1 hour rejection block with previous day's low SMT. Let's put this in Thursday. Once again, guys, it's crazy how much we can learn literally just from showing up to the charts and observing the market. So 1 hour rejection block and CE hit. Okay. So now we drop down. So we're using this 1 hour rejection block as our PD array, right? Look at how perfectly we tap this. By the way, guys, this is also Tuesday's first presented for value gap. Check this out, right? Going back to Tuesday, if I go to Tuesday here, this is also Tuesday's first presented for value gap. Because I was looking at the first presented for value gaps earlier, and I saw this and I thought it was interesting, right? So here's the first presented for value gap: 930, 931, 932. So this is an additional confluence for this idea, right? Drag this all the way over. And look at this. Look at this. Bang. Actually, once perfectly hit here, and then again perfectly hit here. So very nice confluence for sure. So there's that Tuesday first presented for value gap. And then 1 hour rejection block, perfectly tapped. Look at the CE getting perfectly tapped there. That is so beautiful. Oh my gosh. You guys see that? So now we have a 1 hour key level. Let's look for a 5-minute change in state. And we get a very, very obvious one right here. So guys, you see how this is ending up playing out incredibly obviously? Like, these are the kinds of trades you want to take, where it's this obvious, everything lining up exactly like this. These are the kinds of trades you want to take. Previous day's low SMT, CE tapped perfectly, along with that first presented for value gap. So these are the kind of trades that you can have very high conviction in. So with all that in mind, yeah, we get 5-minute change in state here. Very clear this is really high probability change in state, right? You see how, like, this is just really obvious the market's ready to go around liquidity. So 5-minute change in state right there. And yeah, observe. Look at how the market perfectly reacted off of the Tuesday first presented for value gap and also the midpoint of the rejection block here. Oh, no, wait, did the market open? Why? I thought it was Labor Day. Well, I guess maybe it's open on Sunday because, I don't know, other countries might not be doing Labor Day. I don't really know how it works. But market perfectly reacted off of Tuesday 1. Market, actually I'll say market reacted off of Tuesday 1 P FVG. And perfectly, almost, Right, bang. So, see all that? Let's go ahead and screenshot this. this was also on Wednesday. 1 hour rejection block CE and Tuesday. First presented for value gap. Crazy how all that lines up, right? And then what we can do is we can measure out that manipulation leg. I mean, at this point, it's very obvious that that was the manipulation. You can measure out standard deviations. And 7th hit perfectly. We do eventually hit the 8th, but not until after we retrace. But that's why I scale out. So hedge funds and banks trade like this. So some hedge funds do. The ones that do are profitable, but guys, there's a lot of unprofitable hedge funds. And so a lot of banks and hedge funds are actually big sources of liquidity for, so like what percent of hedge funds are actually profitable, right? Not a lot. So the ones that are profitable are using smart money concepts. The ones that aren't profitable, they're gonna be liquidity on the large fund level, and the market's gonna seek the hedge funds liquidity that are basically the ones that don't know what they're doing, right? So some hedge funds do, but a lot of hedge funds don't. And it just kind of depends, are they trading profitably or not? And some of them might be trading completely different, and they might be trading profitably, yeah. But the reality is, I think if you look at, like I learned this in finance class in school, like on average, hedge funds don't really provide abnormal returns against the market, and because it's the average. It's so funny because it's like they try to use that as a reason to say the market's efficient, but like no, right? On average, they're not beating the market, but that doesn't mean that individual hedge funds aren't beating the market, right? So not all, just like regular people, there are profitable hedge funds and there are unprofitable ones. There's ones that know what they're doing, and there's ones that think they know what they're doing, but they don't. So, to answer your question, some of them do, but not every person in the world knows what they're doing. So, banks using smart money concepts, that's laughable, don't you think? I think the ones that are trading profitably have to use smart money concepts because it's how the markets move. I think the ones that don't, that you're talking about, that are laughable, I think sure they might be profitable in other aspects of finance, but they don't know the intraday movements of the market. They don't know why the market seeks liquidity. They don't know why on the 5-minute chart stop losses got ran. They don't understand buy side and sell side liquidity. They don't understand S&T. So yeah, sure, they might understand fundamentals. They might understand how to project out future regression of stock, but that doesn't mean that they understand the intraday movements and the hunting of stop losses within the day. And so, yeah, I think it's ironic because what you're saying is totally true. They're not using smart money concepts. A lot of them aren't. That's why a lot of them are unprofitable. But the ones like smart money concepts, I think Ice-T said this before, it's above a lot of the like actual like big banks. Like a lot of big banks don't even understand smart money concepts. I mean, a lot of them do because obviously, they want to be profitable, but a lot of them don't. And you have to understand everything's gatekept. Goldman Sachs bank traders look at 5-minute charts, and that's what I'm saying. They don't, right? They don't understand those 5-minute intraday fluctuations, and that's why I'm saying that they don't use smart money concepts, right? You get what I'm saying? So you're kind of proving my point that not all banks are using this stuff, and it's exactly like you said, because they don't really know what they're doing on a intraday price movement basis. They understand the long-term fundamental outlook, but they don't understand why markets move in the intraday form that they do. Since 2023, I've seen your grind. Your struggle is analysis process. Stick to 5 or 6 PD raise. Instant profitability, bro. Do that 100. If not, pushing you, but it's the truth, bro. Okay. I appreciate it, but I'm just going to keep doing me. Oh my gosh. Over 2 years now. Actually 2 years and 1 month. So Yeah. And look at this. We probably hit the consequent encroachment of this rejection block pretty well. Yeah. Bang. So anyway, yeah. Once again, you probably just target that fourth standard deviation, which is aligned with this giant consolidation, which is going to be a giant liquidity pool. Who got you into smart money concepts? Me. I just started learning about it. Yeah. See how this where the majority of the transactions happened lined up with that fourth standard deviation? That's not a coincidence. That's smart money planning out this buy model ahead of time. And yeah, a lot of banks are not trading smart money concepts. It's because a lot of it is gate kept at like the highest level. A lot of the good hedge funds are not going to go around telling everyone their secrets, because why would they? Why would they? And they want you to believe that it's just random, and they want other hedge funds to believe that it's just random so they can stay liquidity, right? And if you don't think that, then you got to look at the charts more, because you can't deny perfect precision in these markets. And if you do, then I'm sorry for you, because you're just missing out, right? Like, look at the perfect precision of that consequent encroachment tap, the Tuesday first presented for value gap, change state, right? So the way we take this is we look for us to react off of this 5-minute change in state here. Just a friendly note from a 20-year vet, and stay away from all this nonsense. Trade weekly and 4-hour swing points and just risk management. Whatever, bro. It's your opinion, and that is great. And what works for you is not going to be what works for someone else. But I can tell you one thing. This stuff is some of the most precise stuff in the world. So I appreciate your opinion, but I'm going to do me, and you can do you. So... So yeah, this would be a very high probability trade in my opinion. You see how the market accumulated, generating liquidity above buy side liquidity. Then we manipulate, take out the lows. Once again, not everyone trades the same, and if what's working for you is making sense to you, then great. But this is what makes sense to me. So now you could, yeah, I'd probably actually do it like that, right? Okay, accumulation, manipulation. And then, but think about it. Why do you think the narrative is so the way that it is? That smart money concepts are not real when obviously they are. It's because the people who are gatekeeping want to keep it gatekept so bad that they are spreading this narrative to keep as many people clueless as possible. I mean, just look at the charts for yourself and see if the market respects these concepts. Just look at the charts and personally do your own backtesting. And if they don't make sense to you, then that's fine. I guess that's your loss. But the reality is the market is moving in insane precision. And so, I mean, I don't feel the need to convince anyone who doesn't want to see it, because, yeah, it just, there's no point. But accumulation, manipulation, and then expansion back to target that liquidity pool. Thanks, man. I appreciate it. Yeah, dude. I just, like, I don't know. I just do me, and I understand that you can be profitable with super simple strategies, just having a basic slight edge in the market. But personally, I want to have a deeper understanding of the market at a deeper level than just a simple entry model and just being a slight edge in the market. I want to be not just a good trader, but a great trader, and that's just how I feel. And I understand maybe that's a harder course to take, but that's kind of how I feel. So So yeah, this was 2050. This is a flow state retest, 1 hour, and then 5-minute change in state. 1 hour key level, 5-minute change in state. So 2050, 1 hour key level, 5-minute change in state on Wednesday. Alright, save that. I respect your grind, but seriously, look into waves and just structure trading. Yeah, thanks, man. I appreciate it. Yeah, whatever works for you. At the end of the day, everyone's got different personality, and you got to do what makes sense for you. For me, this is what makes sense. If the Elliott wave stuff and all that waves makes sense to you, and harmonics, then do that. Like, if it makes sense to you, and especially if you're making money, right? If you're making money. But for me, I think for me, ICT concepts make sense. I don't even trade ICT concepts because I like ICT or anything like that. I think he's a cool guy. Don't get me wrong, but I'm also not an ICT sheep, you could say, right? Like, I'm not a ICT is always right kind of person. I'm a free thinker, and I legitimately just think ICT concepts are not only truth, but they're a really, really, really precise way to trade. So that's just my thoughts. But I totally get where you're coming from. So, all right, let's keep going. Man, look at that first presented for value from Tuesday. Just insanely precise, guys. Let's go ahead. And then as well, we end up getting another buy model within here. You see how we generated liquidity all through here? And then, actually, you know what? Let's actually I need to make a new section because I want to include more macros here. What's this macro? Was this a macro? Yeah, 220 to 240. Let's add that macro. So I'm going to add the London macros. Once again, I kind of just add stuff as I think about them. But you see how this was where the expansion occurred, right? The 20 until 40 macro. And why are 20 to 40 macros in the first place? Why are they even and why is 50 to 10 a macro? Because 50 to 10 is when the 1 hour candle closes and opens, and 20 to 40 is when the 30-minute candle closes and opens. So power of 3 runs based off of time. So we got to pay attention to those times, because that's when the market's going to seek liquidity, because that's when the 1 hour and the 30-minute candles end up closing, right? There's an actual reason to the macros. It's not just, oh, the macros are just what ICT said. No, it's because they actually represent something real. The candle is closing, and based off of how it closed, it's going to expand in a specific direction, right? Most people do not understand that. Anyway, we have a 15-minute gap down here in probably discount of this, if I had to guess. So let's mark this out, 15-minute for value gap. And yeah, let's see if this was in discount here. Not quite of that range, but I'm guessing it was within discount of this price leg here. Yeah. So 15-minute for value gap. You can see we generate liquidity all through here. Let's see if there's SMT. Once again, I need to get these macros sorted out. This is one of those trades where it's like, if I could just catch this in the moment, if I was just on the charts at this exact time, you know I'm printing. You know. It's just so obvious. 15-minute guy in the shadows. Are you the one? Think about, bro, take care. I know. Everyone tells me that. Trust me. It's not like I haven't thought about it. I understand. Other people like to just trade a simple statistic and the simple edge just to barely get them, to be profitable, and that's fine. I just don't want to do that. I want to understand the markets at a deeper level. So that's just how I feeling. You know, that's just how my personality is, and your personality's whatever. Like it can be different than mine, but that's just my personality, right? I like to understand the markets at a deeper level. So you can see we end up sweeping these lows here. This amazing trade, amazing, right? You see how we dig down into this 15-minute discount for value gap. This was so beautiful. Honestly, I kind of want to get rid of that macro because that macro was not relevant. You can see the 20 to 40 macro here. This is where it was at, right? And so you're just going to have to kind of tell based off of the context what macro is actually going to matter. And you can see this one was the 2040 macro, right? 2040 ended up running liquidity. We had that liquidity pool aligned with that 4th standard deviation. Let's go ahead and make this bold here. Notice how the 20 to 40 is exactly when we go run liquidity, right? So you can market change to delivery in a few different ways. The most obvious way is when we get this. And so that's where I would enter personally. I know you could take this lower one if you feel like a degen. Personally, for me, that's just not the kind of trade that I would take. If you did enter at that lower change in state, you know, that's fine. It's actually really high RR, right? That's 8 to 1. Nothing wrong with that, right? Nothing wrong with that. But let's actually first mark this out, just so we can say that we marked it out, right? So this was Thursday, and then look at that, 8th standard deviation, perfectly hit. Dang. See that? Obviously I didn't measure it out perfectly, but you can see the market drove through to that liquidity pool. That was where we measured out that range, right? We measured that out. That was where the transactions were, and that's where the market drew to. So, anyway, bang. Bang. And yeah. Once again, I would not personally take this lower change in state because it's just not obvious enough to me. I would take this higher one, but I want to mark out this lower one first, right? We sweep out these lows into this gap. Once again, we know the bias here is bullish because of the higher time frame model. So now we're framing a lower time frame model within that higher time frame model. What's up, hyper? What's the one? What do you mean by the one? So yeah, and then you can see this was a 2040 macro here. That's exactly when we went to go run liquidity. So actually, let's actually mark this out just so you guys understand what I'm talking about, right? Just a giant accumulation range. We obviously dip below into a gap, so then we frame our model off of this gap. So accumulation, manipulation, right? And then distribution. To go run to the highs of that consolidation. And we had LRLR here. Are you still in Justin Werling mentorship? Who are you talking to? Me? Or are you talking to Hyper? I've never been in Justin Werling's mentorship. Never learned this. Well, I've watched videos from him, but I've never personally been mentored by Justin Werling at all. It's never been mentored by him at all. I kind of honestly do my own thing. I take concepts from everyone and then put my own understanding into it, because at the end of the day, if you can't understand what you're doing and you're just trying to be copying someone else and not understanding it for yourself, you're never going to be profitable. That's just how I feel, right? If you're not understanding, like, you just have to put your own spin on it and what makes sense to you, right? So accumulation, manipulation, distribution. You can see this happens right in this 2020-2040 macro. Let's actually mark this out. And let's actually get rid of the 4th standard deviation. Okay, ball out, dude. It's what makes sense to me. It's what makes sense to me. Oh my gosh. It is so funny how why do people try and convince me so hard not to like I don't get it. Like I feel like there's the only explanation is that people really don't want me to be profitable and they want to hide the truth because obviously this stuff is the truth. Smart money concepts is the truth. The only reason I could ever understand why people would say stuff like that is because they really want to keep me um, in the dark. So honestly, H ball out, bro. I totally see you being a worker at like some high tier hedge fund, and you're like, dude, please shut up because the more people you tell this stuff to, the more people you tell smart money concepts to, the less liquidity we're gonna have to be able to take profit and make money off of stupid people. So I can read through the lies, dude. I can read through the lies. Of course, people in hedge funds and big corporations don't want me to know this stuff because they want to keep it get kept so they can have more people being dumb liquidity. They want that. They want as many people to stay dumb because as long as, you know, that's what they want, right? Just being realistic. This is institutional trading. This is not MACD. This is not RSI. This is basically actual liquidity. Understanding how orders get filled. Understanding when one person enters the market, another person, a counterparty, has to be a liquidity provider for your entry, right? That is the truth of the markets, regardless of how you look at it. That's the truth, and a lot of people see that as supply and demand. It's all different versions of the same thing, in my opinion. H ball out, bro. I don't trust you, man. I'm sorry. There's no way you're not some secret insider from Goldman Sachs or like some crazy up their firm and you're trying to distract me. There's no way you're not. I can read through your lies. I can read through it. Like, why do people try and convince me not? It'd be one thing if people were telling me, "Oh, you should try this." It'd be one thing if they're like, "Oh, you should try MACD. This is what's working for me." But the fact that people are saying specifically, do not do that smart money concept stuff. Just don't do it. Please just don't do it. That makes me feel like it's just like, yo, yo, you're gatekeeping. You're gatekeeping. Because it's obvious this stuff is the truth. If anything, it just increases my conviction more and more. I think people are scared because it's becoming more and more popular. And they don't like people like me because I'm telling the truth. So this was at 2:02 a.m. This was on Thursday. (2:02) flow state retest, 15-minute, 1 minute. All right. Once again, I probably would not take that lower entry because at that point it's not obvious to me that we're gonna go run liquidity. What I would wait for is I'd wait for that other change in state delivery. 2:02 flow state retest and 15-minute, 1 minute. But yeah, the way I would take this for real, because that's just not super obvious to me. The way I would take this is I would wait for this change in state. I'm telling you what works. SMT doesn't. You aren't taking anyone's money with SMT. So are you super profitable? I'm working on it. I'm not perfect. I make mistakes. It's like you can understand something at a high level and still be a human being and make mistakes. That's kind of where I'm at right now. Like, I understand these markets are moving to go fill orders. But I'm also, it's hard when you feel like your life depends on it. It's hard when you feel like you want it so bad more than anything else, and the wanting it is what makes it so hard. That's why they say it's so hard to become a profitable trader if you're trying to only do trading, because that's the issue is you get essentially you start to feel like you have to make money, and when you have to make money you force trades, and honestly I'm in the point where Like, I do understand the stuff at a really high level, but I definitely just do stupid stuff a lot. And so I'm working on it, but I have gotten payouts, I have gotten funded. So whatever that means to you, but it's a work in progress. I'm not trading with my life depending on it. I'm just saying that's an issue for a lot of traders. Okay, bye H-ball out. I don't know why you're even here if you're just gonna argue. But okay. Oh man. Alright, you see how this is just super clean model here. Accumulation, manipulation. I just don't get it, guys. Why specifically are people trying so hard to get me to not trade ICT concepts, smart money concepts? Why is it there? It's never, oh, you should trade this or you should trade that. It's please, please, please just don't trade the smart money concepts because those are they're just terrible. They just don't work. Guys, it just makes me feel like everyone's just gatekeeping as hard as they possibly can to have as many little people know about it as possible. That's the only logical explanation, right? Because ICT concepts are the truth. You can't argue with it. It's just true. All right, so like I said, this is how I would take this. This would also be an inverse value gap, very obvious inverse value gap here. So I would wait for that, and then yeah, this would just be a super brainless trade, right? And let's see if we measure out this manipulation here, up to that third standard deviation, so which aligns with that liquidity pool. That's where I would target. Once again, this is a very obvious trade, very nice trade. Hi, ICT, cool, bro. That's it. You versus you mentorships we're keeping in mouse level. I don't know what you guys are talking about, bro. Okay. Anyway. But yeah, this is just such an obvious trade, guys. Like, Hydra macro, right, from 2020 to 2040. You see how the market will respect these Hydra macros here. So Hydra's not lying, guys. 20 to 40 macros, they're the real deal, right? Don't sleep on them. Do not sleep on Hydra macros. And then distribution here. So yeah, up to that third standard deviation. Once again, what am I even using to measure this out? I'm using the body to body of this liquidity sweep here, and then yeah, I would enter on the close. With us entering on the close, I don't put my stop loss all the way at the low, because the whole point of entering on a close is I'm anticipating us to go actually run liquidity right away. So you could put stop loss either here or here. I'd probably put it here because there's no reason to be that aggressive. Yeah, 2.36. You know what, just for the sake of it, let's say we did put stop loss here. Only thing is, this is fair value gap right here, but I guess if I'm anticipating us to go run liquidity, then I should have a tight stop loss. And yeah, you can see how the market ended up going there. So once again, there's two different versions of this. You can put stop loss here, which is the realistic way I would take it, but you could also put it there. And yeah, so let's go ahead and screenshot that. It's okay if you the chat, I don't care. Doesn't matter to me. Yeah, 1 minute change of state. So I'm going to have two different versions of this trade where 2:20. This is at 2:20 a.m. And ooh, wait, was there SMT at the low? Okay, actually I'm distracted now. We got to see if there's SMT at the low. There has to be, right? Yeah, there probably is. Oh, wow. I don't think there is. Anyway, still a good trade. 220. Flow state close. 15-minute, 1 minute. It's just funny how hard people try and convince me not to trade ICT. It is just weird. You have to admit, it is a little weird. It's a little weird. Like, what? Why? Like, why hate so much on someone else's strategy instead of just saying, you should do this strategy. You should do this. This is what works for me. Instead, people specifically say, do not do that. Do not do that strategy. Just don't. Please don't. Please do not trade that way. It's just like, what's the point in that? What's the point in telling someone not to trade a specific way? Is that just not the stupidest thing? Unless there's an actual reason, which, I don't know. To me, it seems like people want to hide the truth. Right? Once again, we're gonna mark this one out as well. Yep, there we go. Distribution, 15-minute for value gap, 1 minute change in state. You could do mark. Oh, you know what? We should have it marked out like that. See, that's a little bit more obvious. But either one of these count as change in state, right? Those people are, yeah, like, I just will never get it. I will never get it, and I'm not here to try and fight with them. I'm not here to try and argue with them. I'm just saying, I don't get the point. I don't get the point. I'll never get it. They can just stay unprofitable, I guess, because, I mean, it's just IC is just common sense. Orders need to get filled. You need to have, for every transaction, there has to be a opposing side for that order to get filled. And so it's understanding that that's going on, and on the other side, there's stop losses at highs and lows. And those are basically two fundamental concepts of ICT. I mean, it's not even really ICT. It's honestly like just basic market stuff, but you know what I mean, right? Like supply and demand, or support and resistance. I don't even know. There's a lot of people outside ICT that think the same thing, and it's kind of funny because, like, I'll end up arguing with someone on Twitter about this, and it's like we're saying the same thing, and we end up saying the same thing. I'm like, dude, we're literally saying the same thing. It's just we're trying to argue, but we're saying the exact same thing. Orders get filled because of liquidity. It's like, oh my gosh, I don't know. Sometimes it's just brain rot, but yeah, 220. So this is another one. So this is the same thing, but just shown with a bigger stop loss. 220 flow state close. 15-minute, 1 minute, number 2. Beautiful. I mean, if I see that in live time, I'm taking that every single time. This was on Thursday, right? All right. Yeah, I might go take a bathroom break, and I'll be right back. Let's check to see if there's anyone watching. And then I'm going to go on a bathroom break, and I'll come back. Fine, watching. Let's go. All right. Well, I'm going to go on a bathroom break. I'll leave this little art project up for you guys to look at, but I'm going to go to the bathroom, and I'll be right back. Actually, guys, just hang on one more second. I'm gonna go get a hoodie. I'll be right back. Okay, actually, I didn't end up getting a hoodie. I just ended up getting a crew neck. But yeah, let's keep going. Dude, I was kind of losing my voice there, honestly. Like, I don't know. Like, I don't get the point of people that try and say, do not trade a specific way. It's like, what? Why just do what works for you and not care what other people are doing? Hyper, do you know what I mean by the guy in the shadows? I do have a Lambo. You have a Lambo? That's crazy. Ice-T, let me tap you. I see you IG on X. Dang, dude. That's crazy, guys. Lambos, dude. Alright, anyway. Just look at the Hydra macro. Look at this. Right? So, I'm guessing this was also a higher time frame inversion, like probably a 3-minute IPG, so we could just mark that up. Right? That's a pretty obvious trade. Right? You just simply just say, okay, yeah, it looks like this is a 5-minute inversion. Very, very simple inversion, right? Delivering from a fair value. This is one of the trades that's just like common sense, right? You don't need to be a genius to know. We have low resistance highs. We have a liquidity sweep into a fair value gap. And then we have an inverse fair value gap here. And so I would definitely, yeah, I think this is pretty good, right? Going into the Hydra macro. Actually, let's just let's get rid of that actually for now. So once again, either you could have this be an additional confluence for your trade, or you could just take it like this, but I do think this is nice. This inversion is nice. I don't care that we really wicked this out because we still got low resistance highs up here. So conceptually, I understand that the market's still going to want to go there. So, and yeah, we run straight without liquidity pool. That's a 2-to-1 right there. That's a pretty good trade, honestly. Can't be upset with a good 2-to-1 like that, right? Yeah, this was London session, so we'd have to take this in London session. Actually, I'd put stop loss probably at consequent encroachment of that. Or, actually, you probably wouldn't swing low. Yeah, so that's the thing. You'd have to take this in London session, but I just like marking up the charts, observing trades. But yeah, this was London session. This is actually right as London opens. And you'll know as well, what's the important time for the London session? Do you guys know? It's 1:30, right? 1:30 is the true open of London session. So You see how we manipulate right after 130? Is that a coincidence? No, is not. It's not a coincidence that we manipulate right after 130. See what I'm saying? Manipulation, and then distribution. See what I'm saying? Not a coincidence. Okay. I need to make a video on true opens. I still haven't, and I'm probably gonna make it this week. Hopefully, I'm gonna make a lot of videos this week. I have a lot of content I'm wanting to make. London kills some, bro. ICT is great. Yeah, man, it really is. And yeah, bang, right up to those highs. So 5-minute inverse value gap. Let's go ahead and screenshot this. Yeah, 2 a.m. Right at 2 a.m. we just start to distribute. Crazy stuff. Once again, also Hydra macro, right? 220 to 240. I mean, that's just perfect. Look how fast we hit our target. Genuinely insane. Let me actually re-screenshot this. What's up, Trader? How are you? Trader 2212. I'm doing pretty good. Besides the dude that was talking to me just now in that whole conversation, but once again, I don't really care what people think. So, but yeah, there's a guy in here that was just in here is like, dude, no, whatever you do, do not trade ICT concepts. And I'm like, what's the point in saying don't trade something? Like, I would get it if he's like, oh yeah, you should try this strategy or that strategy, but whatever you do, do not try ICT. I don't know, man. It's just weird. Is that not weird? How's the 1 minute looking on that trade? Yeah, let's take a look at that. I'm gonna screenshot this real quick. We were just looking at the 1 minute. And yeah, if you took it at the lower change in state, then there'd be a really high RR trade, but I don't know if you'd get it. I'll take another look at the lower time frame. This was 220. I'm gonna call this inverse value gap. 5 minute inverse value gap at 220. Very, very simple in the Hydra macro. And let's go ahead and save that. So yeah, on the 1 minute hyper, there's essentially two different opportunities. I marked up both of them already, but we have the lower change in state, which is the less obvious one for higher RR. Now this ends up working out, but once again, it's more risky, but better, higher RR, right? So there's this one that goes ahead and hits the 8th standard deviation. But then the one that I would probably take is I'd wait for this external gap to get inversed, and then we get this violent 1 minute, this 1 minute change of state delivery here that's really, really obvious. And this right here, this is the one that I would be super happy about taking, right? This 1 minute change in state right here. And that's at that point it becomes very clear we're gonna go run liquidity. But yeah. Bro, people are just dumb. I mean, it's just kind of weird. It's just kind of weird because I would get it if they were like, dude, you gotta try this. It's working for me. This strategy is working so well for me. Because then it's like, okay, he's just trying to help. But like specifically saying, do not trade this strategy. I know, it's just weird. It is just really weird. It almost makes me feel like people really just do not want the truth out, which is that ICT concepts work. Smart money concepts work. That's just how I feel about it, though. Um, yeah, that's kind of the 1 minute time frame for you on this trade. Very, very clean, super clean price action. And let's see if there were any other confluences here, right? Let's see if there were any new day opening gaps. Yo, I can't make this up. I can't, I can't make this up, dude. Bro. Oh my gosh, bro. What? You see that new day opening gap there? Bro. That's literally like, that's just beautiful. It's just beautiful. Look at how the bodies all respect it. Look at how these bodies all respect the new day opening gap. It's like perfection at its finest. So yeah, I actually, now that I see this new day opening gap, I actually would take the lower change in state because I would have conviction because we were holding a new day opening gap. Once again, that's just added confluence. Exactly, exactly. So yeah, I actually changed my mind. I actually do like this 1 minute change in state, the lower one, because we were perfectly holding this new day opening gap. Actually, let's change this to the box one. I like the box one a little better. Look at that. Just beautiful. Like genuinely, like that's perfect. Objectively, the market just perfectly respected that gap. All the bodies hold it. You blocked him immediately when he said ICT SMT doesn't work. Well, I don't need to block those people. It's like I'll let them have their opinion. That's fine. I just don't get the point of going into the chat and trying to convince someone not to trade ICT because that it's just weird. It's just almost suspicious to me because it just makes me feel like there's really no reason for anyone to really care what anyone else is doing unless they're really trying to distract you from the truth. There's really no explanation other than that. It's just weird. I'll say that it's just weird. But yeah, accumulation, right? Then we get this liquidity sweep into that new day opening gap. Let's get rid of that indicator now. We don't need it anymore. Look at that, man. Just perfect. Bodies all respect it, right? We get this manipulation below that low into the gap. And then, yeah, you can enter. It's kind of cool because, as I always say, these 2022 models and flow state models will overlap with each other, right? So we'll have a 1 minute change in state delivery here, right? 1 minute change in state. Once again, we're below the true session open here. See that? So it's another confluence. So yeah, this is that same trade we were just looking at, hyper. But now we're looking at the lower time frame, and with us delivering from the new day opening gap, I actually do like this on a lower time frame a lot more. This is something I would try on my personal account because I like these higher risk reward trades on personal because I don't have to worry about following rules and stuff, right? On my personal, I can go for higher RR and not really give a crap and maybe like risk a little less because obviously it's higher RR, but then if I hit the trade, then I hit 8-1, and that's just amazing on a personal account. You know what I mean? So yeah, that's how I would do this. It's crazy that from the moving your stop loss up from here to here, it moves it from 7.5 to 8.5 R. That's crazy. Anyway, yeah, right to that liquidity pool. I take ICT to be my father because if it's not his concepts, I would have wasted 4 years at Miami for 9 to 5. Yeah, man, exactly. It's crazy. Most people just see that as really, the only path in the world, and unfortunately, it's actually getting harder and harder to make it by doing the traditional path. And I'm not trying to say, like, I think, you can do it. It's just, in the modern world, it's just harder to get by doing that. The traditional route. It requires creative thinking and a little bit of willing to step outside the box. Okay. So yeah, we see how that just... I already recorded this, but let's record this one more time because we also have that new day opening gap now. Yeah, one more time. We're going to record this. 2:05. Flow state retest. 15-minute, 1 minute. Yeah, that's what the lower time frame looks like. We kind of already knew that, though. Oh, yeah. And then we're also going to show how this was a... this was also a 2022 model, right? So if you guys don't know what I'm even talking about, like what? How is it a 2022 model? Liquidity sweep. Liquidity sweep. Also below our session open. It's not like that's required for 2022 model, but still, right? Then I would consider this a gap because even though it's not a singular gap, it combined these two candles, and all of a sudden this is a gap. So you have that gap. And why that gap? Why do I care? Because we broke structure, right? We break this high. And then you can see this is the exact kind of algorithmic displacement we want to see when we're looking at the 2022 model, right? Every single gap holds. Every single gap holds. And then we just start to algorithmically displace. And that's how I know that a 2022 model is starting, because we'll get this algorithmic displacement and respect gaps like this. Your voice has changed / cool MMBM. What? Yeah, probably because before I was screaming and now I'm all chill. I'm a lot more chill right now. I don't know why I was getting so amped up earlier, but yeah, now I'm a lot more relaxed. I don't know. Yeah, I don't even need to have that as accumulation. We get the point, right? Obviously, this is accumulation, manipulation, distribution. I don't even need to mark that out. Right? And then algorithmic displacement. See that? Algorithmic displacement, fair value gap held, fair value gap held, and then expansion to go run these low resistance highs. Alright, so let's screenshot that. Let's say you took that from the lower gap right here. That would be insane. Ooh, we gotta check our gold block levels, right? No way. Oh. It's gonna be, let's check 81. It might be at the low. Yeah, look at that. So this is the fair value gap partition. It's exactly where that fair value gap was. We go from the fair value gap partition to the high of the dealing range. But also, let's look at the 27. That's cool. Yeah, this one is, you know, this is a little less obvious, but the change in state delivery is inside of the change in state delivery partition, right? Because order block is change in state delivery and change in state delivery is order block. So when I see this OB partition, I just think, okay, that's where the change in state delivery should occur, right? So that's kind of cool that happened. But anyway, it does happen at this range low. So, and then we expand. So let's go ahead and screenshot this. You could definitely use that as a confluence without it perfectly lining in that fair value gap partition. You could have seen, okay, we're respecting the low of the dealing range at the new day opening gap. You know what I mean? So let's go ahead and screenshot this. And then let's move on because we've been looking at this for a while now and we need to move on. So 205 2022 model, 1 minute. And this is on Thursday, right? Yeah. Okay, let's move on. Let's actually just get rid of everything. So maybe let's go and look at what happened in the morning New York session. I think we looked at this already though. Yeah, I kind of remember looking at Thursday. Okay, what should we look at now? Once again, we have a giant range and we have a gap. See this? This is that gap in the paint, right? That I always say. See, the market comes down to fill that gap in the paint. So, yeah, we looked at Thursday. Let's look at 7 a.m. here, right? This is a 5-minute gap. Or I mean, actually, I guess maybe a 15-minute gap. I don't know. We call it whatever you want, right? Where'd it go? What is this most obvious as? 5-minute gap, 3-minute gap. A 1-minute gap? Yeah, maybe you consider this a 1-minute gap. And then also, it's in discount. I don't know. It doesn't really matter. Either way, it's a gap. Let's just do a 5-minute gap, right? 5-minute gap. And discount. Oh, I kind of want to look at some more propulsion block trades. Actually, I think there's one right here. Wait, let's actually check my notes. Do I have it? No, I don't. Oh my gosh, this is a really cool one. Look at this. Okay, we're going to look at this propulsion block trade. So it looks like it's not here. Right, this was on Thursday. I'm not seeing it. So I think we can go ahead and mark it up, right? So we have this gap. Discount fair value gap. This is obviously accumulation. This is manipulation. And then you can see here we have an order block, right? An order block. And then a propulsion block. See that? It's kind of cool, right? So we could look for, since a 5-minute propulsion block, we can look for a 30-second change state delivery off of that. Yes, dude, that's smart. That is smart. You should. Well, we've already gone up a ton though, but you know, in general, yeah, like just investing for the long term is usually pretty solid. So Why do I like this propulsion block? Because it was before this move higher. So 5-minute OB, 5-minute PV. Once again, I'm letting the market be my teacher. I never know exactly for sure what I'm looking at, but I just look around. Let's screenshot this to start out. So 5-minute propulsion block, 5-minute order block. And then you see how the CRT shows that we respect it. I find that kind of cool. Okay, propulsion block. And actually, you know what's crazy is I think that's news. Actually, I think that's news. Yeah, man, it is. So this is the dynamis model, right? Where we find a propulsion block, we wait for the market to show that it's respecting it, and then once we get 30-second change in state, we enter. That simple, man. Dynamis model. And although this is news, like, once again, if you're on the right side of the draw on liquidity, I don't think it matters, personally. Which coins are the best? Because you were once in crypto. I saw your old videos. Yeah, I love crypto. I think it's a tricky question because right now I feel like long-term markets are kind of heated right now. For me, if I get into crypto, I kind of want to enter it if I'm entering it, because I'm a trader, right? So I'm kind of always thinking in the trading mindset. I kind of want to enter based off of like a higher time frame model. But I don't know. That's definitely not for everyone. Whoops. We could actually take a look at crypto after I finish this markup. Where'd it go? Okay. Yeah, I'd probably just take profit there. Just a nice little 2-to-1. Once again, nothing fancy. I don't need anything fancy. I just take profit at that high. That's it. So, yeah, we could definitely take a look at crypto. So, yeah, this is the dynamis model because we have a propulsion block, and then we got 30-second change in state off of the propulsion block, entry on the close. That is it. That is dynamis model, right? It's pretty cool, right? Stocks or crypto? Yeah. Honestly, like, it's tricky because, like, as a person who's been in crypto and done there and done that, it's definitely moving in cycles, right? And so, from investing is totally different than trading, and oh, man, like it's like there's a lot of different ways to invest. You can just say, I'm just gonna buy and hold and not care. And that works for a lot of people. And, you know, I think that's a good way to go about it. But it's also, like, from a trader's point of view, I also am aware that it's like, well, crypto runs in cycles. So we have to be aware of where we are in a crypto cycle as well. So we're going to take a look at that. And then, you know, stocks run in cycles as well. So it's a little different when you're a trader. But I do think best bet is usually just buying and hold. The issue is, right, the issue I have with that just buy and hold narrative is most people do not understand the fluctuation that can occur over literally a 10-year period. Like from 1997 to 2008, you would be break even on your S&P position. And I don't think most people realize that. Like, it's actually not as consistent as it's made out to be in this current moment, because in this current moment we're in this crazy bull market, right? But in the reality is there's going to be ups and downs unless you're holding for 20, 30 years. It's you really kind of have to be careful, but we can take a look at it. Let's take a look at it. 5-minute propulsion. Okay, what was this? 830. Dynamis model. 5-minute, 30-second. Or no, yeah, it's called Dynamis. Yeah, your best bet is just buying and holding, but I mean, also just keep aware that we're definitely getting further into the cycle, I would say. 830, yeah. Okay, 830 Dynamis model, 5-minute, 30-second. Let's take a look at crypto and stocks. So, yeah. So what do you want to look at? Bitcoin? Yeah, so I think, it's interesting because on one hand, obviously it's a bull market, right? And then you can see this was just a giant accumulation, manipulation in the year 2022, and now we're distributing. So this is why I say, like, I just don't know. I don't know. Like, it seems like we're pretty far into the distribution. You get what I'm saying? Like, if this is accumulation, if this is manipulation, and then this is distribution, it feels like we're pretty far into the distribution. And if I measure this out, we're definitely past max extension, right? So I don't know about, like, for me, like, I don't know. I'm not investing. But the thing about investing is you kind of have to treat it different than trading, right? You can't just, if you're gonna be an investor, be an investor. If you're gonna be a trader, be a trader. But don't try and, pick your side, right? Because if you're just investing, then you're an investor. Like, you can use trading concepts, but just, just focus on, like, why you're investing in it, not, like, because at the end of the day, they're two different things. But yeah, I mean, I'm a lot more bullish on Cardano. Like, I want to see. I know this is kind of like, this would be kind of a lot to ask for, but I would love to see some kind of manipulation below these triple equal lows. Actually, you know what? I kind of like it like this. Triple equal low sweep into here, and then maybe distribution. But the only reason I say that is because I'm in the camp that, like, I know alts, bleed the Bitcoin, at least right now, but eventually that won't be the case. I mean, ETH, we've had a move where money flew from Bitcoin to ETH, I'm pretty sure. Could be wrong. So usually what happens next is we go from ETH to alts. Now, not financial advice at all, right? But you can see money is flown from ETH. Let's actually pull up Bitcoin and ETH on top of each other. So, right. Whoops. So there's Bitcoin. And then scroll down. Hyper, are you still here? Bitcoin, and then ETH. So you can see how, like, ETH hasn't even broken. I think it barely broke all-time highs. Yeah. I don't know, man. I'm not. I just, whatever you do, don't lose money. If you decide to be an investor in something, be an investor, not a trader. Because these markets are manipulated as heck. So you have to pick your side. Either enter it as a trade or enter it as an investment. But don't go into something thinking you're an investor and then end up being liquidity because you decided that you didn't want to invest in it anymore and it went down and it hit a liquidity pool, a sell side liquidity pool, and then all of a sudden you're sell side liquidity. You get what I'm saying? Because a lot of people go into investing at buy side liquidity pools thinking that they are an investor, right? Someone comes into, for instance, like you go into the market and they buy above old highs. They buy above old highs thinking that they're going to be an investor in something, and then they end up being sell-side liquidity, right? Like here. Like this perfect example, right? Oh, Bitcoin long-term investment. Ooh. Oh, actually, no. There's sell-side liquidity. You get what I'm saying? Right? Just be careful is what I'm saying. Pick your side. Either invest and conceptually understand what you're doing and hold to the long run and don't be emotional, or be a trader, understand the trading concepts, and maybe you could do a combination of the two if you're smart about it. But at the end of the day, right, just don't be liquidity. And if you're gonna be an investor in something, pick that you're an investor and don't change your mind. Like if you have a thesis for an investment and it starts going down, it doesn't mean you shouldn't change your mind, because at that point the narrative is the same. All right, that sounds good, Hyper. Because yeah, the problem is if you go in, like I was saying, if you go into investing as an investor, and then if you change your mind when it goes down, to me that's no longer investing, right? And that's the issue with a lot of people is, for instance, let's actually go back to big screen and look at NASDAQ, right? A lot of people throughout this entire run say they're investors, right? They're all like, oh yeah, we're investors, we're holding for the long term. And then the market comes down and runs to sell side liquidity, which we know this is just a giant market maker sell model, right? And all of a sudden these so-called investors change their mind and sell for a loss below these equal lows. So all of a sudden, they said that they were investors, but in reality, they ended up just being sell-side liquidity for traders. So what I'm saying is don't mix up investing and trading. If you're going to be a trader, pick to be a trader. If you're going to be an investor, pick to be an investor, right? Don't panic sell at these lows. If anything, buy more. You get what I'm saying? Because a lot of people try and say that they're going to be investors, and then they end up being sell-side liquidity because they change their mind because they don't want to be an investor anymore. And that's what I'm saying. You basically have to pick one or the other. Pick. Are you going to be a trader? If you're going to be a trader, we can trade this as a sell model to go run the sell-side liquidity pool. If you're going to be an investor, okay. Right? See what I mean by sell model, right? Liquidity sweep, break of this low here, and then for value gap. Or if you're going to be an investor, hold it for the long run, right? Don't panic at the sell-side liquidity and be sell-side liquidity for a trader. You get what I'm saying? Hopefully that makes sense. Easier said than done, though. Because, for instance, COVID is a perfect example, right? All throughout here, everyone's saying, oh, yeah, we're just going to invest. We're going to invest for the long run. Yippee, woohoo. We're going to be investors. And then all of a sudden, we hit these equal lows. And all these so-called investors change their mind, right? They panic sell for a loss at these lows. What I'm saying, not financial advice, is guys, either when you buy something, go into it as an investor where you're never going to sell it until, the actual narrative changes or, your profit targets hit, right? Enter as an investor where you're buying and holding, or enter as a trader where you're getting in on the market maker model, but don't say you're an investor and then become sell side liquidity. Is all I'm trying to say, right? It's because it's really, really easy to end up being sell side liquidity. You get what I'm saying? So, anyway, hopefully that makes sense. I mean, even this entire range right here, right, ends up being, we end up running sell side liquidity here. And most people, after holding from August of 2020 to October 2022, all these through this time, everyone that bought NASDAQ was thinking they were a long-term investor, and then we hit sell-side liquidity, and all of a sudden, those investors all of a sudden they decide they want to be liquidity, and they sell for a loss right here, and that's why it feels like the market is purposely trying to manipulate you out because it is, and that's what we know as traders is the market is going to manipulate you out, and that this whole narrative that the markets are random is a total lie, and it's being told to you to try and trick you, right? So, anyway, you can see break a structure here. Break a structure, and then fair value gap, and then we distribute up, right? Yeah. So yeah, hopefully that rant made sense. Let's see if there's anyone watching. Yeah, hopefully that made sense. It might not have, but I don't know. Okay. I mean, see how the market is still running off of trading models on a weekly chart? Do you guys see how this is just a giant ICT 2022 model where we come back to equilibrium here? I mean, people go into the market thinking they're an investor, but it's really all it is market maker models. So they come into it thinking they're an investor and end up sell side liquidity for a market maker sell model. And that's what I'm saying is, as someone who wants to protect you guys, I'm saying be careful. Equilibrium hit, and then we deliver higher. So anyway, I might take another break. Look at this, right? Accumulation, manipulation, distribution. Yeah, I'm gonna take another break. I'll be back, but yeah, I was kind of feeling like whenever I feel like I start to feel like I'm yelling, I kind of just want to take a break because I hate. I don't know why I do that. I don't know why I start yelling. It's just weird. But I'm gonna take another break now. So, all right, let's go. 3 people watching. That's pretty good. All right, I'll be right back. Okay, I actually think I'm gonna take a longer break, and then I might stream again later tonight. I might not, but yeah, I'm gonna take another longer break. So I'm gonna end the stream here, and we'll probably maybe continue it later tonight. Yeah, we'll just have to see, but.